Hello, ladies and gentlemen, and welcome back to another Real Estate America's Newsroom edition. It is the beautiful month of June. It's the 23rd day, and it's the year of our Lord, 2022. We have an action-packed show today. Once again, big talking points that you're not going to want to miss. Ken Langone, who is the co-founder of Home Depot, shares his thoughts on the economy and what we're all dealing with from a recessionary standpoint. So you're not going to want to miss that. Adjustable rate mortgages skyrocket in popularity, ladies and gentlemen. The adjustable rate mortgage is back. So we're going to find out why it is so popular. Jerome Powell, the Fed chair, says recession likelihood is not elevated in a recent interview with Congress. We've got some clips from that to go ahead and see what's happening there. The first home in the United States of America is designated as a wildlife prepared home in California, meaning they have a fire and insurance rating, and their rates are down in the town of Paradise, California, which burnt down here a couple years ago. And your home insurance becoming uninsured. What does this mean for different people in the state of Florida? It's a big crisis in that state, so we're going to go ahead and talk about it. Let's see here. Let me go ahead and bring in my esteemed and illustrious co-host, Mr. Nick Sakis. Hello, Nick. How are you today?
What's up, buddy? How are you?
I am fired up. There's a lot of good things happening in the world and in the news, and our viewers need to hear and know about it.
That's right. I just put in the comments, so I want everybody to let us know your thoughts on the current economy. It seems like, we go live every Tuesday and Thursday, and it wasn't too long ago where the news didn't seem like it was changing all that much. It seems like it's changing every single hour of every single day now. So we have new breaking stuff coming in. So our Tuesday and Thursday episodes are getting pretty exciting. But if you do find value in this, please go ahead and like and share with anybody else in the real estate industry so that we can kind of form a nice group here of people who are like-minded, wanting to help move the industry forward. And just arm you guys with as much knowledge as possible so that when you're talking to people in the market, you can go ahead and be your best.
All right. So, ladies and gentlemen, we here at Real Estate America's Newsroom do not insure your electronic devices, but we do ask that you go ahead and smash that bell that's sitting inside of the electronic device for us.
Smash that bell.
Smash that bell. And hit the like button if you like us. And if you don't like us, hit that too, but make sure you leave a comment because we like good, positive, and also we'll take the negative criticism.
Yeah. We got thick skin. Let us know.
Yeah, bring it on. All right, ladies and gentlemen, we stream live every Tuesday and Thursday at high noon Eastern, 0900 Pacific. Tell your friends to bring their favorite beverage and listen in. We are the newsroom that's cutting through the mainstream media noise and bringing you real-world, frontline, battlefield exposure and opinions on what's going on from the front line. So go over to runation.com, ladies and gentlemen. Check out Real Estate America's Newsroom over there. Enter your information to get all of the show notes that we go ahead and send out to everybody. And also, if you guys would like to actually participate with us and be on the news or have any hot insider information, please let us know. Send us a message. So, good deal. Nick, I see a big difference in opinion in the mainstream news from political and economic business minds. Like two polar different opinions that's happening.
Yeah.
So, Mr. Ken Langone is one of the co-founders of Home Depot, and he's got some pretty interesting information he was sharing here a couple days ago with Maria Bartiromo from Fox Business. Let's go ahead and tune in to him and see what his thoughts are.
On housing, joining me right now is the co-founder of Home Depot. He is the founder and head of Invamed Associates, Ken Langone, joining me right now. Ken, it's great to see you. Welcome back to the show. Thanks so much for being here. How do you assess the housing market after that sharp number yesterday?
I beg your pardon?
Housing starts down 14.4%. We had a 75 basis point hike from the Fed. Was that the right move? And give us your assessment of the impact on housing.
Actually, Maria, I would have felt better if the Fed had gone to 1% and been more aggressive about inflation, because frankly, it's deep and it's wide. And we're not going to get out of this unless we get more aggressive with interest rates. I'm talking about hopefully another 200, 300 basis points this year, which means I'm arguing for 1%. next month and 1% the money after that. We're not going to solve this problem in a soft landing. We're not going to do it. And housing starts are the first example. Because when people buy a house, the one thing we want to know, how much am I going to pay a month? What's my monthly charge?
That's right.
When you take rates up like that, those monthly charges change. But we're in a recession right now, in my opinion.
So you think we're in a recession right now, and you may very well be right. We had a contraction in the first quarter. Atlanta Fed's looking for zero growth in the second quarter. Ken, you knew that inflation was not transitory. All those months when we were hearing it's temporary, it's not a big deal, it's transitory. You said, no. I see what's happening, and this is far from transitory. What has been the impact, and do you worry that if we were to see real slamming on the brakes, which is what the Fed is doing, like you're talking about a 1% hike, that it's going to tip us even further into a recession? How does that play out, Ken?
Well, I think it's a combination of factors, Maria. First of all, it's with the shortages we've had. It's with this insane energy policy, where here the President of the United States is going to go halfway around the world to beg to somebody who we say we don't respect the way they do things to help us out. Then on top of that, we've got all kinds of dislocations in the economy, shortages. I think it plays out one way, Maria. I think it plays out in a serious recession, probably as bad as we had in 81 or 82. And I think those of us that are investors, we want to structure ourselves in accordance. And so you want to watch balance sheets. You want to make sure you got first-class management. Hopefully you got a nice dividend record and you've got liquidity. But right now, Maria, everything I see indicates to me, as I said more than a year ago, it was not transitory. My surprise and my disappointment is the Fed. They certainly had more information than I did, and they should have been more sensitive to it. But the chairman of the Fed was saying himself, oh, no, this is transitory. It'll go away. It hasn't gone away. It's gotten worse. And frankly, I think it can get even worse than it is right now. So,
that's right.
By the way, I'm an optimist over the long term. I think this is where you want to be in America, over the long term. But over the short term, we've got some serious challenges. And I think until we address those challenges, we're not going to solve our problems.
Yeah, well, you're right. The Federal Reserve took us down this whole transitory road for over a year. Janet Yellen did the same thing, by the way. Treasury Secretary said it was temporary. And now here we are. Freddie Mac shows the 30-year fixed-rate mortgage has jumped to 5.78%, the highest level since 2008, and the largest weekly increase since 1987. Ken, you say we may very well be in a recession right now. How does one protect themselves? I mean, you've got to allocate capital regardless of the macro story. What are you doing to ensure that you're protected? And what should the business manager out there know, the investor, average investor out there know how to behave in times of recession?
Well, first of all, make sure your own personal balance sheet's in order. I strongly urge people, this is no time to be leveraged. And so, number one, I would shy away from any borrowing. Number two, I would have a significant cash reserve, not to invest, but to give me the freedom of not having to sell for monetary needs when the markets may be abnormally low. So to me, a conservative balance sheet, personal balance sheet, great companies with strong balance sheets, good managements, nice dividend record, or a promising future. I have some stocks I own, one of which is a company called Optimum Hold. It's a healthcare home healthcare provider, doing very, very well, not paying a dividend, but growing very nicely with a very strong business model. So I'm not pulling my horns in, but on the other hand, I'm making damn certain that if there's going to be a severe storm, I'm going to be a survivor. And I think that's what all investors should be doing right now. These are very treacherous times, Maria. Look, frankly, the lack of leadership in Washington is discouraging. For the President of the United States, not once, to say, I made a mistake or this is my fault. If you'll look, every single thing that's happened negative, the devil made me do it or somebody else that did it. When is he going to show leadership, including bellying up to the bar and said, this one's on me?
Instead, they're pushing this climate agenda, Ken, and it's really permeating throughout every agency. As an investor, how do you get around this pressure to do ESG? I mean, the Securities and Exchange Commission investigates funds to find out exactly how much of the portfolio is ESG compliant. And you've got the SEC saying all companies have to follow rules.
Look, that's political. That's not economic. We don't have the energy source to generate enough electricity for all the things we want to move from fossil fuel to electricity. We just don't have it. So, look,
Right.
This will pass. This will pass. Put people in their homes where they can't heat them because they can't afford the oil. Trust me, they'll see the light. They'll say, hey, wait a minute, enough of this green stuff. What about our living now?
That was a little long, but this is what's going on.
I guarantee Grandpa wasn't wearing any pants in that interview. That's all I got to say.
Well,
I wouldn't want to be in the war room with that guy, though.
Well, so somebody who co-founds one of the largest brands in the United States of America, that has franchise stores in every town just about across the United States of America, and is one of the biggest suppliers for all of our household goods and raw goods for homes and lumber and everything else. They have to make smart and wise decisions. So I can see the frustration on the wall right there, right?
Mm-hmm.
So he says we're in a recession. Let's bring in the Duke of the Dollar, Mr. Tim Parnell from Patriot Wealth Nation. What say you? Is Ken in the right thought process, or
I'd love to have a drink with that guy and just go back and forth on what his thoughts are, because I mean, definitely in alignment with what I've been saying, and it's nice to have someone out there with the kind of clout that he carries pushing back against a mainstream narrative. I think most people have woken up to the fact that this is not transitory. This is going to be sticking around for a bit. It's only going to get worse. But to have someone like that's certainly got his, finger on the pulse of the economy, given the business that he helped founded, I mean, it just makes sense that he would have an idea. But yeah, I mean, this, like, I don't know how you can look at this thing and go, no, everything's hunky dory, everything's fine. It's insane to me to think that that's still a narrative being pushed, but it is.
Nick, what are your thoughts?
Yeah, I like Tim said, I'd like to have a drink with that guy, right? he's seen some things and done some things. But yeah, no, I think anybody who's listened to the show for the past couple of weeks understands that we're here, right? The difference being, I think the difference with the general population versus more calculated approach is, like, when you hear recession, like, everybody hears recession and they're waiting for the sky to completely fall in and there be zombies on the street. Like, that's what, if you hear recession, that's what you think about as a general consumer, instead of just like, okay, well, things aren't going up as fast as they used to be. We're getting dialed back in certain categories. Like, yes, we are in a recession. Is it a apocalypse? No, but I think most people think apocalypse is the end all be all, right? So we are in a recession. Like, there's no ifs, ands, or buts about it. It's just the gravity of the situation. How much bigger and how much faster are we going to get into a zombie type situation, right?
I don't even think it's that. So one of the things that frustrates me personally, Tony, is there's such a polar opposite in the narrative that's happening in the mainstream media right now. There's a big difference between political and economic. And here in segment 3 of the show, we're going to see our Fed Chair, Jerome Powell, who's at the steering wheel on making these adjustments, say that recession likelihood is not elevated. What say you here?
If you turn off the TV and turn off your phones and just go to work and make smart decisions, you'll see small changes around you either way financially. This is not the Great Depression way back when times were extremely terrible. I'll borrow from what Nick said. If you're riding a wave in California surfing, because we have perfect weather all year round, pretty much, and you're riding a great wave, the wave gets bigger and bigger, and you're heading towards shore, and the wave gets a little smaller. Uh-oh, the wave is in recession, but you're still in a wave. So it doesn't mean you crashed and burned on the surf with the wave. It's still good. So as I've mentioned a few other shows, some of the sensationalization of this news media, their job is to, make it kind of sound like the sky's falling, so you tune in. Whereas on this show, people tune in because they want to hear what real working people, boots on the ground, have to say, and maybe poke fun at them a little bit. So that being said, while nobody really knows what's going on, I think there's a lot of people in good positions out there that are making decisions, sometimes out of our reach, out of our control. But the consumers, I think, have a lot of control. So as long as the news stops freaking people out, that I think we'll be better off in the long run. It's kind of like when you go to your doctor and he looks at your chart and goes, uh-oh, and you're gonna freak out. And he says, oh, you're perfectly fine. There's nothing to talk about. Oh. So I think we're going through some of that. Now, that's not the perfect answer, but I think it's something I wanted to tell people so they don't sit there biting their fingernails wondering what's going to happen. I think if they tune into our show and listen to us, they'll probably hear a little bit more realistic dialogue, I suspect, even though we're not federal chairman of the reserve or anything like that. Now, the Duke of the Dollar, I would listen to him before I listen to, a 96-year-old guy, even though he's rich and powerful. But I bet right there, that guy probably has some really solid advice for the rest of us.
That's a hell of a good plug. Paul, I'm curious, right? So Tony says if we turn off the mainstream news and we just go about our life and get to work and go doing our travels, not long before we do turn off the television and start traveling down the road, we're going to find ourselves at the gas station paying twice as much for our fuel and gas. And then we're going to end up at the grocery store and we're paying just about twice as much for all of it. So even if we don't, there's this internal feeling. You also own restaurants, so you're in that industry, and typically that industry has the first type of pullback. Tell everybody what you're experiencing right now as far as consumer confidence and pulling back on their spending.
Well, I liked what the co-founder had to say, Jake. And did you guys hear an echo?
No.
Is it you're a little hot on your side, but it's all right.
Okay. How about now?
Better.
Okay. So with that said, I think I liked what he had to say. This man is clearly aged and wise, the way I like to put it. He sees what new builders are paying for construction. He sees what people are fixing their home up, what they have to pay to fix their home up to put it for a resale. Eggs, if you noticed, was up 32%. That's $1.07. That's a lot of money. And yes, I agree with Tony. Turn off the TV and just and focus on your life. I think you'll have less stress, but you also got to close this too, because this is the new TV. And I also want to say that
unless you're watching Real Estate America's Newsroom.
That's true.
Okay.
Yeah. We got the Kuba Real Estate. We got the Duke of the Dollar. We got good stuff on this show. We turn it off and come into your house and slapping you, whoever you are.
But one thing I disagree with Ken on that is that he said I think that we should have just went 1% and then go another 1%. And to logically thinking, and again, I love my macroeconomics teacher in college, Mr. Wendt, very intelligent man. Yeah, that's the way you're going to fix this. I feel we're in a recession as well, and I feel that it's going to get harder. But how is 80% of the masses going to make it with another 1% up? Because the 20% will make it. They have the investments and they have the advisors. How about the rest of the 80%?
Tim, break it down. That's a question for you.
Yep. So I think that depends on what you actually believe is happening. I don't think that it's a wise idea first of all, it is healthy to shut off the media. Okay, that is a healthy thing to do. I stopped watching mainstream media, stopped listening to the radio, the stuff that comes out of there. I had to stop it all. So I get my sources from other places. I like boots on the ground, real journalists. And so, yeah, you got to dig for that kind of information. But as far as close your eyes, pretend like prices aren't rising, that things aren't getting tougher. And so I can't buy into that, because that ignores the reality of what's going on. And like I've read some posts on people saying, I'll just I'll just wait for my 401k to come back. And I'm like, if you are at retirement age, how long can you wait? And how do you know that it's done? Like, from everything that we're seeing, it looks like it's only going to get worse. I do believe that. And so is that a sky falling thing? No, that is just a good beat of reality that's happening right now. But some people truly are oblivious to it. They do want to believe that everything is hunky-dory. And I think the best thing they could actually do is just wisen up to the facts and say, hey, this is what's going on. I need to make preparations in order to make sure that I'm hedged against what's happening. And, but yeah, prices are rising. They're not going down. It's going to get worse. You know, you don't have to like that, but it's going to affect you. So you might as well step into the reality and prepare yourself.
All right, Nick. So some say we're in a recession and other people say that there's no sign. So any final takeaways on this segment before we get into the next one?
I think, in the spirit of 4th of July, the 75 basis points that was just raised was like the Fed lighting a firecracker and it never went off. And now they're thinking about, do I walk up to it and try to light it again? And they're doing a little dance and they're like, oh, wait, we really need this thing to go off. We really need this thing to work. Let's light it again. And they're talking about it. And they're right there getting ready to light the fuse while everybody's covering their face because they don't know what's going to happen. So that's what I think what's going on right now.
Well, so I'll comment further on that. The Fed's, I mean, what the man is saying is that the only tool the Fed has to battle inflation is interest rates. And what he's saying is inflation is so bad that the interest rates that they're raising it to right now aren't enough to compensate for the recession that's actually happening.
Right.
And so he's basically saying they can't get this right. So if you just read in between the lines, he's telling you they're not going to get this right. And so the only thing left is that we're going to feel the pain, the squeeze, the whatever, because you're damned if you do and you're damned if you don't. Under this scenario, they either turn up the rate so high that people get hurt that way, or they don't and they get hurt anyway. And so that's why it's kind of, you know, a double-edged deal on this thing. And so again, that's what he's saying. That's what he's talking about. The Fed cannot raise it so high because then they'll obviously be the bad guy. But at the end of the day, like, who's controlling this market? Who's controlling the numbers? Who's lying to us about the numbers? So anyway,
the Americans are going to get hurt regardless.
I mean, I think you're looking at a global issue right here. I mean, this is what's wild to me is, like, yes, we are dealing with issues that are on the home front right here in America, the heart of America, but this is a global economic issue. And there are countries right now, Sri Lanka, just their entire economy just collapsed. They literally gave everyone in Sri Lanka a day off from work to go be farmers. They don't have the means to farm, but they're like, hey, if you want some food, you need to start growing it. That's what's going on in Sri Lanka right now. It's just one of many countries that's coming because this isn't just an America issue. So.
All right, ladies and gentlemen, we're going to go ahead and stay on the front lines and let you know what's going on. If we see a fix or a non-fix, we're going to let you know. But so the Fed went ahead and increased the basis points, which shot the 30-year adjustable rate mortgage up to some big highs that we haven't seen since the mid-2000s. And now the adjustable rate mortgage is surging in popularity. Let's check it out.
Wine distributor Giannina Arturo just closed on this New Jersey home using an adjustable rate mortgage, or ARM.
In order to get this house, I knew that the 10-year ARM was the way to go. That was the only way it was going to work.
ARMs offer homeowners a lower starting interest rate than a traditional 30-year fixed mortgage, the lower rate usually lasting 5, 7, or 10 years. Giannina's 10-year ARM has a rate that lowers her monthly payment by more than $300.
The difference in that rate between fixed and the ARM was enough to either price me out or price me in.
But an ARM is not without risk. Like the name says, they adjust after the introductory period, going up or down based on market rates.
What no one can say is how long this housing crisis will last.
Back in 2008, millions of homeowners ended up in foreclosure, in part because they used an ARM to buy a home they couldn't afford after the loan adjusted. With 30-year fixed mortgage rates now topping 6% compared to about 3% a year ago, ARMs are making a comeback. The percentage of ARM loans has more than doubled since the start of the year. Loan Depot founder Anthony Shea says he's not worried about another mortgage meltdown. In 2005, ARMs made up 36% of all home loans. Today, they're less than 10%, and lenders are more stringent with who they approve.
They have to qualify for a loan today, which we're very happy about.
Other protections of today's ARMs include limits on how often rates can adjust and caps on annual increases.
Who should avoid an adjustable rate mortgage?
Someone that does not like to see their monthly payments increase, because that is no doubt a possibility. You do not have a tolerance for being surprised by a higher monthly payment. You should really look at a 30-year or 15-year fixed rate.
For Giannina, the adjustable rate mortgage works.
I'm very happy with my decision. I'm happy with the house choice. I'm happy with the payment choice. I'm happy with the rate choice.
If you're considering an ARM, talk to your lender about options and terms. Know exactly how high that mortgage interest rate will go and whether you can still afford the monthly payment.
Thanks for watching our YouTube channel. Follow today's top stories and breaking news by downloading the NBC News app.
All right, you're welcome. You're welcome. So, adjustable rate mortgages, gentlemen. Nick, take this down for me here real quick. The ARM product in the mid-2000s was a lot shorter. People
a lot shorter. Yeah.
People that could fog a mirror back then were getting loans. So the actual qualification process was you're alive and you can go ahead and use this tool and write something on a piece of paper. That was it. Stated income back then. I mean, they were just pushing products like crazy. Now we have more stringent qualifications and the actual ARM terms are longer. So we're talking 5-year products, 10-year products. Break this down for everybody that's unfamiliar with what an ARM is versus a fixed 30-year mortgage.
Yeah, so back in the first housing crash, that, like Jake said, the adjustable rate mortgage became rampant, but it was also in combination with the no-doc loan. He says stated loan or bank statement, or even not even no verification loan. So like anybody could get a loan. It was based on the prediction of the housing, almost like a investment property on residential. So there was people buying properties that had no business buying them, had no means to repay the debt if they weren't rented or if they weren't flipped in a 6 to 8, 12-month period of time. So the ARM loan is just a tool like anything else. And so if you were to ask me right now, if you're a single, okay, everybody's situation is different. Everybody in real estate's, has a different reason to buy a home. But if you're in a situation now like that lady was, where she was either not going to buy a house or buy a house to provide for her family and be able to be in a situation where she could make sense of it and have a 10-year run, a 10-year adjustment on that ARM. Now, most people only live in their homes 7 to 8 years anyway. So like if you're thinking in that term, like this isn't just buying a property to flip it in a year and timing the market. This is, I can't afford to get a house any other way. And I understand what I'm getting into. And this product helps me get into that situation. And I can't afford to pay my mortgage for those 10 years. I think it's a no-brainer, right? If you're either going to be on the street or renting from somebody at an exorbitant rate or doing a smart ARM loan with a properly educated mortgage broker or banker or whatever, like I'm 100% for it. It's just when they hear things, again, it's back to like my analogy, like the recession. You hear recession and you think apocalypse. You hear ARM loan and you think 2008. Like it's two different things. ARM loans can be powerful when they're used properly and when you know what you're getting into. And in the overall economy that we're in right now, where interest rates are going up at the same time as pricing, it's a no-brainer right now for that to be a tool to come out of the arsenal right now for mortgage brokers.
Tony, your marketplace is seeing a lot of adjustable rate mortgages. Break this down.
Well, I think real estate agents have to be very careful when talking about the financial aspects, because if you're not a lender, you might misspeak. So I would make sure talking to a real estate agent that doesn't go above their pay grade. In my particular example, when I'm talking to buyers and when the subject of an ARM comes up, or I just mention it and then refer them to a lender who I know, like, and trust, the ARM, like Nick said, it could be a good tool. When you really think of it, it's just simple math, because at the end of the day is, what's my payment? What is it costing me to have this money compared to what if I'm renting? And I think we can all agree, semi-hypothetically, Rents are going to keep going up. The ARM is going to be fixed up to a certain point. And it's during that time, again, like Nick said, people will usually live in a home 5, 7, 8, 10, 12 years. So if your ARM is long enough, pardon the pun, if your ARM is long enough to make it comfortable for you mathematically to stay in the home and enjoy it and reap the benefits of possible tax deductions and building your equity and the value going up and for future resale, you could cash out, making air quotes, cash out and sell before you get any changes in that ARM and hopefully wind up with a hell of a lot of money in your pocket to move on to another home and possibly a conventional loan at that time. So the ARM can be a good strategy. I would say that you want to talk to an accountant and your lender and look at the numbers at the end of the day and decide how long you're going to live in that home approximately. You're taking a reasonable risk that the home should keep going up in value. And in Irvine, California, for example, that's been almost a no-brainer because the values here go nuts. So if you had an ARM, then you want to cash out and sell. It was significantly more convenient to sell at a higher price and move on, but it's not going to apply to everybody. So I would say cool heads got to prevail. Just make sure the math works.
Tim, these people need to qualify now for these adjustable rate mortgages. So they're actually looking at people's personal balance sheets, their debt to income ratios, in order to even qualify for a mortgage product, right? So people need to go ahead and have a home to live in for shelter, right? And if we're faced with increase in rent prices or getting ourselves into a piece of property that we own, what say you on the matter? You're on mute, by the way.
Just the way
so yes, the adjustable ARM mortgage is not what it used to be. Obviously, with the qualifications being more stringent, you're not going to put somebody in there that can't afford the increase. Okay. I do remember people that had adjustable rates after the crash or they had them before the crash, but they stayed in their house. They didn't give up their mortgage and they started going down as the rates came down. And they were very, very happy about that. My concern would be that somebody goes into an adjustable rate mortgage thinking that might be the case for them. I think they really ought to just prepare for, hey, this thing's going to go up and just be ready for that kind of commitment. And, if it gets you into the house and that is something that you need to have and you plan to be there for 7 years or so, then, sounds good. But I agree with everything Tony said on, you need to make sure you're talking to a qualified lender that can make sure they're advising you properly. This is not a question for a real estate agent. This is something between you and a financial professional that can help you understand the implications of that.
Paul, do you see ARMs being more prevalent in your neck of the woods?
If you absolutely need to get a house and the fixed rate is not working, I see it as a possibility, and I see it as an option to get you into a house. I foresee interest rates continuing to go up. And I think that's where the real advice needs to come in from your lender and your accountant. How long are we going to stay in this house? Because I just personally see them going up to possibly 8 to maybe 8% at least, I see.
Yep, absolutely.
10 years is a long time. A lot can happen in 5 years. A whole lot can happen in 10 years, right? So if you do an ARM loan right now, just know that you should be proactive in following the market because you're going to have to strike when the iron's hot on a refinance to a fixed if that's the end goal. You can't. This wouldn't be a set it and forget it type of situation. You'd want to maybe talk to your mortgage broker annually to figure out, or somebody annually to reevaluate the situation.
Well, things are moving so fast. Wouldn't you just recommend maybe a steak dinner once a week with your mortgage broker?
Yeah, probably. Or us. I mean, you could buy us a steak dinner too. We'll keep you up to date.
All right, ladies and gentlemen, make your comments below. Do you guys see ARMs continuing to be more popular or not? Jerome Powell says that there's not an indication on a recession likelihood being elevated. Let's tune in and see what's going on there.
Well, thank you. I have a series of questions. I have not asked my questions. I was saving them for last. But then after my questions, we'll adjourn. You said that Russia's aggression in Ukraine, port congestion, and COVID lockdowns in China especially have contributed to higher prices. Consumer spending continues to be strong. Many Americans, most Americans probably worry about inflation. Talk for a moment, if you would, about the strengths of the American economy now and whether or not you see positive signs of prices stabilizing.
Well, consumers are overall, not every consumer, but overall the consumer sector is in very strong shape financially. There's, as you know, a very substantial accumulated quantity of savings on balance sheets, less so at the very bottom of the income spectrum, but right across the rest of the spectrum. And so that's there to support spending even in the face of higher inflation. And you're seeing consumer spending hold up pretty well. Sorry, the rest of your question.
Well, are there positive signs of prices stabilizing?
So in terms of prices stabilizing, what we're looking for is, compelling evidence that inflation is coming down, and we don't have that. So nothing I could point to says that we have that. I will say that core PCE inflation is a pretty good indicator of where underlying inflation is running. And it has moderated over the course of this year reasonably significantly from where it was in the latter part of last year. Still way higher than it needs to be. We need to see a lot more progress. But just it's been running at a rate over the last, say, four or 5 months that is lower than it was, at least. But again, still far too high. So we're looking for that. We're not really seeing it yet. There are lots of stories out there how this should happen, and some people think it's very clear that it will. And until we actually do see it happen, we need to keep moving.
And I want to be clear from your comments publicly, your comments to this committee today. You say the economy is not at the point of a recession, correct?
I don't see the likelihood of a recession as particularly elevated right now. You should know that no one is very good at forecasting recessions very far out. No one's been able to do that regularly.
No one's been able to do that?
Wait a second. Moment of silence. Americans that are watching right now on this show, please let us know if you have any confidence in what the Fed is doing. Yes or no? Comment below. I'm curious. Well, at least he didn't take the fifth. Right?
Plead the fifth.
Yeah.
1, 2, 3, 4, fifth.
All right. So there was a lot of talk there. Likelihood of a recession, Tim?
Yeah, well, a couple things. One, I think we now know what happened to Art Garfunkel. So I was like, what? I had no idea he wouldn't have witnessed. Anyway. So the other thing is, anytime that man speaks, it's word salad laced with obscurity. Okay. And then you got to dig out what the heck he's actually saying. And what he's saying is, I don't know. I mean, it's not as bad in the last 4 or 5 months, but it's still pretty bad. I guess we'll just have to see. I just broke down the entire thing for you. You're welcome. That's what he said.
I want to see Jerome Powell just say something like, I love my job. I love my job.
He's one of the characters, and I do believe a character is an apt description of these people that are put out in front of us so that they say things that make people who aren't asking deep questions and looking for answers actually believe this stuff, or go, oh, that sounded like some flowery words. He must be, very confident in what he's saying. So I guess we're good. And so yeah, I've got nothing else to say on the matter other than anytime the man speaks, I'm just like, here we go again,
Well, last week, Tony, there was a gentleman that asked him about the housing market specifically. And he just straight up said, I don't know what it's going to do to the housing market in that business. So I love the confidence, Jerome. Good job. Good job. So for me to you, good job, Jerome. So please tell me something more than I don't know. If you're the man on the trigger, what say you?
I'm going to give out my little secret weapon because, I think everyone on our show has sources they personally trust, but not blindly. So again, free plug, reportsonhousing.com. Stephen Thomas has been reporting on the housing, particularly in Southern California. And he is so good on data and sharing it in a way that people can understand. So if you're in the Southern California area, I mean, yes, I love to be able to have that conversation with clients about the market based on their particular area, because there are tiny little pockets all over the state where the market can be different. But looking at the data, it's really hard. To say I don't know is probably the most honest answer somebody in the government can give us, because nobody really knows and they don't want to take a stand.
Wait, Tony, but he's the one making the adjustments.
Well, you know what? He should come visit people on this show and talk to us. I want to see what's going on behind that thinking. So when it comes to the data,
yes, Jerome, if you're listening, please, we would like to go ahead and
reach out.
Reach out.
We'll get you in a Zoom cube.
I'll make a couple of phone calls. Maybe we can leverage him to come into the show and talk like street level with us.
I'm sure he's been leveraged before. So.
Wink, wink. I don't know nothing. I plead the fifth on that. But I will stand by the data from reportsonhousing.com for my market. We're looking at Southern California or county by county. So I just happen to be in a position where I do have a source that I know, like, and trust that's based on lots of data. It always seems level-headed and reasonable. And the things that he says, I mean, I have my own information, but when I see somebody who has a deep and wide level of information and presents it in a digestible form that just makes sense and you can't knock it, I have a propensity to listen to people like that, but not blindly, and it's been serving me well and the people I work with quite well. So anyone out there who's listening to the show, when you find a real estate agent and you want to talk about the market in your area, in your part of the country, you're not going to necessarily want to look at national data, because something in New York City versus Southern California versus Arkansas, things are going to be different. So it's just a matter of working with the data that you can trust and just being cautious. I wouldn't freak out, but make level-headed decisions. And you want to talk about money, Tim Parnell's right here above me. You could talk to him, you could talk to Nick, or you can talk to me. That's what we're here for. So the data, I think, is going to be more compartmentalized, and that's what people should more likely look at, in my opinion.
So, Paul, Tony recommended everybody except for you and I.
Oh, he's here. Mr. Rogers, I didn't see you. He snuck in here all nice and friendly like.
Apparently, according
man.
to Tony, Paul, your opinion and mine is not as robust.
Who cares what Jake says?
I'll tell you, Hank Williams Jr. got a song that says...
See, this is where I like to go. Please tell me what Hank Williams Jr. said.
He says, preacher man says it's the end of time, and the Mississippi River, she's a running dry.
Oh my God, Paul's singing to us, ladies and
I
gentlemen.
like that. Yeah.
You carry a good tone, Paul.
I'm going to have to auto-tune that in post-production.
Please. I smell a TikTok.
Paul, what are
trouble.
your thoughts regarding Jerome Powell?
Yeah, so Mr. Powell says consumers are in strong shape. Really? How many consumers have their credit cards paid off? How many consumers are using their credit cards and have the money to pay it off?
Right.
Yes, I know I do too, Tony.
Tony, quit raising your hand.
Oh, sorry. I was just contributing.
The people that are watching this.
Oh, those people.
Okay, because that's where I'm concerned about. And that's why I said earlier, the 80%. I believe 20%. Yes, Tony, you're part of the 20, by the way.
Oh, thank you.
But the 80%, I don't think they are. And if you are, please comment. Say, hey, my credit card's paid off. Or, hey, I have the money to pay it off.
Yeah.
I mean, I can tell you right now that the answer is there's more people in credit card debt now than ever before because of inflation, because they were living paycheck to paycheck. And now, in order to put food on the table and get the car, gas to go to work, they're having to pull out the credit card just to make it happen. So by default, this scenario is driving people further into debt and bad debt, variable debt. So anyway, that's definitely a conversation that has come up within, my workflow. So.
All right. So ladies and gentlemen, I'm going to do something that Mr. Jerome did not do. And I'm going to go ahead and give you some strong thoughts and suggestions on how to go ahead and proceed forward in this wonderful time of need.
Deep thoughts with Jake Wolf.
That's it, man. I was waiting for it.
Yeah.
Okay. All right. So guess what? You're paying more at the pumps, and you're paying more for food, and you're paying more for home insurance. We're just paying more everywhere. So please watch your spending. reel it in. We can't come through this transitionary time. A year ago, everybody was living a little bit high on the hog, right? We were in a different economic world a year ago, and definitely 2 years ago. So sometimes it takes us a little bit of time to go ahead and feel like, oh, there's something that's actually happening here. So, but just be smart. Tell everybody to go ahead and watch their spending, reel it in, and prepare for more worse times to happen.
I want to piggyback off that because I'll tell you where we're not spending more, and everybody that's listening to the show is in this camp. We're not spending more on the small businesses in your market. And the reason why is because usually the small business owners are the last ones to raise their prices because they're the most scared to do so, right? So we are all in this category of small business owner. We all see prices raise. We all see that the cost of employees that we have to manage are now raising as well. This might be the time to not only watch your pennies and what your outflow is, but you might need to raise your prices. And if you're a real estate agent right now trying to survive, it's upping your value so that you can at the very least maintain your compensation and not compete in this category of 1%, 1.5%, 2%. We can't talk about commission rates. I know as unilateral, but in general, now is a really good time to dig in your business, look at the books. What are your monthly expenses? How can you raise your value so that you can at least maintain or increase your prices to combat all this?
And I'll piggyback on that one, Nick. And first of all, he's 100% right. Here's the other thing. The businesses that survive recessions are the ones that thrive on the other side. So now it's a matter of survival. You have to stay afloat. You need to come out the other side. You need to be intact. People need to know that this is what you do because you're going to be one of the survivors. And that's something to say that all the other businesses that were like yours that are no longer around, okay, people aren't going to think of them because they weren't active. They weren't out there. They weren't putting their name out. So this is something you need to think about and this is a 10X principle. What's that guy's name? That's
Grant.
Yeah, Cardone. So, Cardone. And that was a Grant Cardone thing where, like, if you read his story, he went 10X in a down market and put his name out there, knowing that he was going to be the one seen on the other side when no one would know anyone else because he was the only one advertising and putting his information out there in the recession.
Absolutely. Paul, what is our motto for this year?
No breaks.
2022, no breaks. All right. You heard it from Paul. So, ladies and gentlemen, support your small business. I did that yesterday, Nick. Nobody knows this, but I said, you know what? I'm going to support a small business. And it was a long time coming. I haven't had ice cream in a while. So I went ahead and pulled up to a nice small business ice cream stand, and I went ahead and purchased a double scoop mint chocolate chip waffle cone. And I felt really good about giving that $7 for that tasty treat. I supported small business. So I urge everybody to do.
I approve that choice of ice cream flavor, by the way.
All right. So the first home in the United States of America to be designated as a wildlife prepared home. What does that mean, Nick? What do you think?
I have no idea. I hope there's not snakes involved like last week.
There was snakes involved earlier, right? So yeah. Let's take a look. Here we go.
Is KCRA 3 News at 6:30.
These devastating pictures have stayed with many people for years. Row after row of homes in Paradise reduced to ashes in 2018. In all, more than 18,000 structures were destroyed by the Camp Fire after it ripped through parts of Butte County. And years later, the town of Paradise continues its long road to rebuilding.
Today, one home in that community became the first in the country to earn the designation of a wildfire prepared home. Meteorologist Heather Waldman explains what will help protect this home from any potential future fires.
I knew that I wanted to rebuild as soon as we found out that Paradise was gone.
Paradise homeowner Casey Taylor has been determined to return to the community that she loves.
From the very beginning, as we were moving to rebuild the town of Paradise, the goal was to rebuild back as an example.
Today, Taylor's rebuilt house was officially designated as the country's first wildfire-prepared home by the Insurance Institute for Business and Home Safety. That designation provides proof that a homeowner has taken scientifically proven steps to create defensible space and mitigate wildfire risk. including installing a Class A roof, using recommended vents for attic space, and making landscaping changes.
They still have the wood fence, but there's this break point where they go to a metal fence with aluminum slats in place.
Most of the requirements for the wildfire prepared home designation are already part of state code, but the biggest upgrade is maintaining 5 feet of non-combustible space around the entire perimeter of the home.
All of these ideas are things that we have looked at in the laboratory and in post-event. So we've seen, okay, this home had gravel and look, the embers landed and they didn't ignite the house.
Representatives from the insurance industry say that having a standardized list of steps for fire mitigation could help homeowners acquire insurance and make that insurance more affordable.
But most importantly, if a fire comes towards their town, they have the best chance to be able to return home.
Checking all of those boxes for the wildfire prepared home designation took some investment and some time, but Taylor says
the effort was totally worth it.
In Paradise, I'm meteorologist Heather Waldman for KCRA 3 News.
Paradise community leaders are working to add these new hardening steps into town ordinances as rebuilding continues. Anyone who wants to apply for the wildfire prepared home designation can start by going to wildfireprepared.com to fill out a free self-assessment, and you go from there.
Those wildfires in California have just ripped through so many of those towns and just devastated the state. So I like seeing this. Tony, what's your take?
Well, that's why we have the fire hardening and defensible space disclosure, which has gone through a couple of small changes, where even like in a transaction now, we have to look at the natural hazard report that's provided in a transaction to see if it's in a high or very high fire zone area. So there have been steps taken in the recent year or two to make people aware of a possibility or that it's highly likely to have a problem and what to do regarding that, like having a fire marshal come out to inspect and remedy any concerns. That being said, California, I'm sure, is probably going to be the leader, unfortunately, in this case, to really step up the game in terms of trying to save lives and property. And of course, the insurance companies are going to be happy to save money. This whole thing they were talking about, I think it was called Camp Creek Road. They call it Campfire, where the Sierra Nevada area killed about 85 people, 239 square miles, or in other words, 153,000 acres. It was the most deadliest, most destructive in history of California, and the most expensive in terms of insurance. So of course, and I know we like to poke fun at insurance companies, but of course, when they see the devastation of people, property, and money, now they're taking the steps to proactively do what they got to do, I'm sure, to save property and lives. But of course, they're trying to reduce payout. It's a business. I can't begrudge them that.
Well, so for this scenario, I mean, that's a legitimate act of God type scenario. Yeah, it's burning down a whole town. That's why insurance is what it is. When you start getting into states like Florida, where you've got a whole bunch of roofing contractors making false claims and massive litigation, and insurance companies are leaving because of it, that's a different type of situation. But
I think things are shaking out with this. I think they're shaking out with this, with the whole fire. And I like the idea that, not to get ahead of myself, but I do appreciate the idea of having a wildfire resistant home. And while it's going to cost the consumers money to have this done, I think it's going to be cheaper for them in the long run. Hopefully the insurance rates will go down, we hope, and above all, save lives. Because I'll spend any money on my home to protect my house from fire, to protect my family, because that's what it really comes down to for us, the consumer. And I think that's a good idea. It's going to cost, but what price are you willing to pay to protect your family and your property? I'll spend everything I have to do it. That's me.
Yeah, absolutely. Nick, what are your thoughts regarding some steps that homeowners can go ahead and take?
I think we talk about a lot about how real estate is micro markets, right? So in Tony's situation, California, that's going to be a big deal. In Florida, we don't necessarily have that, but like you mentioned, the roofing on insurance has become a real problem in the state of Florida. And so I think we're coming into an era of homeowners having to be very proactive in their own preparedness of their home. And again, it's almost like we just talked about with businesses. raise your prices or at least maintain to survive. I think with homeowners, it's going to be the same thing. We can't just rely on, oh, well, the insurance company said this, so we have to follow suit. No, I can take proactive measures on doing or tuning up my roof so that I can keep my insurance or lower it. I can do proactive measures in states where wildfires, like this home preparedness. I think it's great to have these options as a homeowner. And like Tony said, you do have to have some upfront costs, but it's way better than filing a claim, because if you're a homeowner, if you filed a claim, all of a sudden you see on the other side it's not so pretty if you even get a re-up from your insurance, or if you get canceled and get your rate jumped $1,000 or something ridiculous. So
more than that.
Yeah,
I mean, in the state of Florida, some people that were paying, they're seeing 3 to 4 times the actual cost of what their previous premium was.
So this is another great example of, we're not real estate agents anymore, right? I think agent needs to go by the wayside. We're more advocates of the homeowner experience, or if you will, right? We're not just sales associates. Like the ability for you to know all these things that are happening that affect the homeowner and advise people in the right direction is going to keep your book of business growing and growing in a time where everybody's scared as a real estate agent. So I think, keep saying, listen to our show, but you got to be on the front lines of this stuff. You got to be able to advise people to do things in their best interest. And if you can help them save a buck, that goes a long way right now.
So homeowners that are listening to us here today, all right, you can be proactive, speak with your insurance company or insurance broker, and let them know about the steps that you've taken to mitigate any type of fire issues, wind issues, re-inspect your home, maintain it, rejuvenate your roof. There's a lot of opportunity out there. So you can go ahead and raise your hand and say to them, I understand that I just got wrapped up into a policy because of this type of dynamic, but I'm a proactive homeowner and this is what my policy should be. If you show them that you're less at risk of major issues because you're a proactive homeowner, your monthly payment will reflect that. But let's take a look at Florida. There is a major situation happening in the state of Florida with insurance, ladies and gentlemen. So if you live in the state of Florida or are contemplating moving to the state of Florida or have friends or family that are, please watch this and make sure you let everybody know.
Today, Florida's insurance rating agency expects to complete reinsurance reviews for property insurance companies across Florida. Reinsurance is basically insurance for insurance companies.
And ABC Action News in-depth reporter Stasi Olmos has been covering this from every angle on the price of paradise. She explains what's happening and why the extra costs may be falling on homeowners.
The amount that it went up is $2,602 this year from last year. So now it's at $4,393.
$4,393. Lutz homeowner Mary Kilgore didn't want to go on camera, but she represents 78,000 Floridians with Southern Fidelity Property Insurance. Her premium not only doubled this year, her insurance company also just lost its financial rating from Demotech and is working to offload all of their Florida policies to other insurers. But no one has even told her.
I haven't heard one word about that. Nothing. You're the first person to say anything.
Demotech tells me they knew Southern Fidelity wouldn't be able to get enough reinsurance for the 2020 hurricane season.
It was obvious they were having a very difficult time putting together an acceptable catastrophe reinsurance program that resulted in the rating withdrawal.
The next day, the Florida Office of Insurance Regulation filed this consent order stating Southern Fidelity is in hazardous financial condition and must begin a wind-down plan. This is different from receivership, where the state nonprofit FIGA takes over their existing claims and customers have to find new coverage on their own.
So what they've asked them to do is begin the immediate process of placing their 78,000 customers, which are 78,000 home policyholders, with other private insurers in the state.
Reality is, Southern Fidelity is just one of several property insurance companies ending business in Florida in the last 6 months alone. Avatar, St. John's, and Lighthouse are all in liquidation. FedNat dropped 68,000 policies, nearly half of their customers. Lexington Insurance pulled out of the state. As for those who are no longer writing any new business in either parts or all of the state, I've been keeping track. In 2022, that's Florida Farm Bureau, TipTap, United, People's Trust, Universal, Heritage, Progressive, Safeport, and Wilshire. As I've reported in past months, Florida property insurance companies have paid about $15 billion in litigated claims since 2015, majority to roofing companies and their attorneys.
Last year, we had over 100,000 property lawsuits in the state of Florida. All 49 other states combined had 25,000 property lawsuits. So the reinsurers who are putting their capital here in Florida to support the domestic insurance market have basically said, we're not doing this anymore.
Many Florida residential insurers that are buying reinsurance to complete their programs for 2022 are spending much more than they projected because the reinsurance market looks at Florida as being so volatile.
The Insurance Information Institute says that cost will fall on homeowners.
We understand several companies, if they haven't already done so, are planning to file significant rate increases to cover these higher reinsurance expenses.
Kilgore is now working to get more information on new insurance.
A new company, great. How much is that going to charge me?
Some sources tell me up to 10 companies are struggling to get reinsurance. Other sources tell me it's looking more like 5. Of course, we'll learn more in the coming days. In Tampa Bay, I'm in-depth reporter Stassi Olmos, ABC Action News.
Moment of silence for the homeowners of Florida. Moment of silence. Okay, Nick, break it down.
I need 2 moments of silence. No, I mean, listen, I've lived in my house for going on 8 years now. The past, I'd say 3 years, there's been half a dozen companies, at least in my neighborhood, door knocking for a free roof. Right? Get your roof replaced for free if you've had any damage. And all these companies running around that were giving the homeowners, they're running these fake claims. And like the idea that you could get your roof covered with damage was all from like major storms, hail damage, right? All this stuff. So then you have, I don't want to say leeches, but you have a lot of companies in the past 3 or 4 years in the state of Florida that were getting homeowners to sign up for these things. They were filing false claims, you know, a little dent here or there on the shingle, all of a sudden, oh, well, the insurance should replace. And you're getting a brand new roof on your house. If it's too good to be true, it probably is, and we're all paying the price for it right now. I mean, that's not the only reason. It's one of many. But yeah, it's really, really ugly right now.
Tim, what's your take on this? The poor homeowners that haven't had any claims are sitting there getting dropped, right? Because insurance companies are just bugging out of the state. If it's not dropping completely on their policies, now all of a sudden they're having to pay 2 or 3 times as much. What say you?
Yeah, I think this is going to be an interesting thing to follow. I don't know how this ends because, you know, in order to get a mortgage, my understanding is you need to have the insurance, right? The mortgage company wants to have that coverage. So then what? You know, like what are the unintended consequences of this whole thing? I understand the insurance companies are not in the business of spending money. They're in the business of making money. So it's got to make sense. And it clearly doesn't make sense. And so I can appreciate that. But what does that actually do for home ownership in those areas that are not getting coverage? Resell for houses. I mean, just so many different factors. I'm just like, what happens there? I don't know the answer. I really don't. I just think it's going to be an interesting story to follow.
Plus, you have flood maps being redrawn.
Yes.
So we got hit double whammy. I personally got hit double whammy. I wasn't in a required flood zone for mandatory flood insurance, and now I am. And all of a sudden, hey, your insurance has left the state. Like, it's the Wild West right now. It's crazy.
It does seem like there's a drawdown happening on property insurance. I don't know how else to describe it or word it, but it seems like there's kind of like a rally, like a circle of the wagons of bracing themselves for something. So again, these little bitty outliers, these little bitty like indicators that make me go, what are they preparing for? I don't know, but they're certainly positioning themselves to not be spread too thin.
Yeah.
So Paul, I'm hearing that it's going to be a very active hurricane season this year, right? Some of the major weather is reporting large storms, to the tune of 12 to 15 or more possible storms that are heading towards the United States of America. And we all know that Florida gets hit, Carolinas gets hit, Georgia. Some of the stuff swings up into the Gulf, and we've got Hurricane Katrina type issues in New Orleans. So I'm hearing that a lot of these people are pulling out or dropping policies to mitigate against possible big storm issues as well.
Yeah, so this is what I gather, Jake. The homeowner in Florida has three options. You can pay the bill, you can pay off your home and not have the insurance, or you can move out, sell your home and come to North Carolina. And we're full, just to let you know. But I'm almost curious to know, are the insurance companies purposely doing this to slow down Florida's people coming into Florida?
That's an interesting thought. Tony, what's your take on this?
Wow, since rain creates the hurricanes and the floods so frequently in Florida and California, at least in Orange County and Los Angeles, it's always a gorgeous day, 365 pretty much. All we have to do is have good fire insurance, which we used once, and earthquake insurance, which I've used never in 20 years. My state's starting to look pretty good. Everyone's leaving. What are you talking about?
Are you trying
we just
to
got done with a fire segment. Houses burning down, having a 5-foot
Orange
gravel
County's been
trench around your
okie-dokie.
house.
I saw all of these
California,
pictures.
baby.
California's got a lot of wonderful benefits, and one of them, unfortunately, is no flooding, no hurricanes, rainstorms.
Wait a
which I
second,
wish
you
we
guys
had.
are in a drought. You have to
exactly. So
yeah.
there's no hurricanes and flooding.
No
So
flooding, but
we're
you
in
can
good
only water your grass twice a week.
I heard bums throw poop at people in California. I don't know.
Well, that's because there's moisture. So,
okay.
but that being said, in terms of just talking about everyone who has to deal with flooding and hurricanes, often, is that it's a shame that people are being squeezed this way, and that's how I see it, is being squeezed, because I'm sure the insurance companies, they made their money for how many decades, and now they're probably just trying to, like Paul said, to be fair, it is a business. They're not here to be generous. So I really feel bad. Either people have to, spend less and put it into their home, or do something they shouldn't do, is not have insurance, because if something happens, you're really in bad shape. So, and if leaving's not an option, the only thing I can see is they're just going to have to find a way to adjust their financial budgets every month to pay for it. But I'm wondering what the steps it may or may not exist, where who's the ultimate quote-unquote boss of the insurance company businesses that allows them to raise these rates like that? Can someone educate me here? Is there an overseer, or can the insurance companies just do whatever they darn well
Tony's
please?
Going back to the mafia days. Who's the boss?
Who's the boss?
Let's have a meeting with the boss.
Who sits back with the cigar and goes, here's what we're going to do. We're going to raise
La
rates.
Familia. Let's have a meeting of the minds.
Tell Tony Soprano he said hi.
I can tell you that the state itself, the governors, the CFOs, the state legislature approves the insurance's position inside of the states as well. And I think Florida is getting very involved in it. So we'll see what happens. I know Governor DeSantis is got this on his desk and is moving forward on many different things. As a matter of fact, they just went ahead and passed legislation at the end of May that prevents the insurance companies from dropping some of these homeowners. Basically, the homeowners have to go ahead and say, our house is good, have a reinspection and things like that. So we'll keep an eye on that. Now,
listen, all I know is my payment is $2,500 a month. $400 of those dollars is actual going to my mortgage. The rest is interest and insurance and HOA. So like I'm still pro home ownership. Homeowner's a dream. But if you really look at that pie chart of how much my mortgage actually is out of $2,500, it's a little scary.
Careful, Nick. I'll start piggybacking on that and giving people another option.
You guys can't beat me in terms of throwing stupid money at good money. Don't let me get started on our Melrose tax. The tax on top of your tax, and then the tax, and then the HOA. The HOAs, by the way, we call them private pool membership fees, air quotes, because you're spending hundreds of dollars to access a pool and have them cut your lawn at 8 a.m.
Tony, I'm sold. Coming to California.
Come on, baby.
Like tax on tax on tax, it just does it for me. Yeah.
Wait a second. I'm going to consult with my magic calculator here real quick. And it turns out that that poor lady that had an increase now has to pay an additional $360 a month for her insurance.
Oof.
Yeah.
In a time
Yep.
where the average car payment right now in America is $653 a month.
That's it.
For a car payment.
Wait
But
a
if
second.
we-
Somebody
if we
get
just
Jerome
turn-
Powell on the
lost
phone
our
right
bananas.
now.
But if we just turn off the television, everything's fine.
Yeah.
Hold on a second. Hello, Mr. President. Yes, we got to talk. I'm on the show right now. I'll call you later.
Wait a second.
okay.
Wrong number.
Oh,
Wrong number.
Mr. Soprano, how you doing?
There
Yeah,
we
we
go.
got to talk about things. I'm on the show right now. Kabish. And you got that thing I sent you? Okay.
Yeah. See, we need to phone a friend or something, Tim, Tony, guys. I mean, we need to have a hotline, a red phone to somebody, because I think we uncover like some realities here that we're all dealing with.
Yeah, we should have call-in. We should set up something to have people call into the show like that. That'd be nice.
That can be arranged.
Somebody's got to filter that, though.
No,
It's
we don't need a
uncensored.
filter.
You don't
Come
think
on.
so? We'll just
No.
deal with
A
it?
7-second delay? Beep.
All right. Let's go.
Tony, how can
Facebook
people
will
get in
filter
touch
for
with you
us.
if they need
Yeah.
representation in Southern California?
Oh, me? Oh, they can get my phone number at all my social media and email contact by just simply going to my website. That's TonyBabarino.com, and I promise I have nothing to do with the mafia. I'm just saying.
Okay. All right. Paul, North Carolina. If people are wanting to move from Florida to North Carolina because they can't stand their insurance prices anymore, how do they go ahead and get quality representation?
Absolutely. You can find me on social media at Paul NC Realtor, or my phone number, area code 336-963-3684.
Cool. Very cool. Tim, you educate people on how to organize their financial outcomes to hedge against major recessions, inflation, and to be in a more powerful position financially. How can people get educated?
Absolutely. They can reach me direct at tim@patriotwealthnation.com, and be happy to talk to you and see what's going on in your world and help you out there.
10-4. Well, gentlemen, we covered a lot of ground here today. Nick, why should people even watch us at the Real Estate America's newsroom?
I think this time, I mean, it's just damn entertaining, right? At this point, you should no, but in all seriousness, the REU Nation is here to bring you guys a real estate agent's take on what's going on in the market, right? I think we can all agree that there's some crazy stuff happening, but the general public that we all deal with every single day, the buyers, the sellers, everybody that you talk to is hearing all of this stuff. So it's nice to hear it through a lens of an agent, so that you guys are provided with everything you need to have the answers, and, you know, maybe some talking points with people when you're on the phone with them, or your database in your sphere when you're making phone calls of, you know, hey, what's really going on out here? Some proactive things you can do as a homeowner, as a buyer. We're bringing all that information for you for free, just because we like to be on, you know, we like to see our face and talk a lot, I guess, right? So go ahead and share this show with anybody in your market. We would like some representation from all markets. So right now we have about 5 different states that we're covering. We would like to see that grow, get some information from you guys in other parts of the country. If you want to be on the show, head over to REU Nation, fill out the form, check out Real Estate American News. We have our own page, our own form on there. So fill out the form. We'll get you on the show and see what's going on in your market so you can share with everybody else.
Ladies and gentlemen, we stream live every Tuesday and Thursday at high noon Eastern, 0900 Pacific on the REU Nation Network. And do us a favor, share this around, comment, hit the bell, hit the like button, support all of our co-hosts here. So until next time, ladies and gentlemen, have a blessed and unstoppable rest of your day. I thank all the co-hosts for participating. And did you say firework earlier in the show?
I did. Let's relight that firework.
Let's relight it. Let's see if we can go ahead and light it. Jerome Powell, if you're watching, this is how you do it. was a big firework.
That was good stuff.
All right, ladies and gentlemen, be blessed and unstoppable. Have a safe weekend. We want to see you all back here next week with all your fingers and your toes. And until next time, we're out of here.